Some people are only focused on the rate when getting a mortgage, and they simply don't realize that there is no monopoly in the mortgage marketplace for the lowest rate. You heard me properly. There is no lender that has the lowest home loan rate. When you see or hear about a below market mortgage rate, that generally means in the MICE type, you are paying a point or points. Mortgage points have their place and are not right for everyone. When getting a mortgage for the first time or as a repeat homeowner, there is only a few mortgage professionals that can provide you with a super competitive rate, that provide you with the lowest cost of borrowing, and those mortgage professionals are part of the National Association of Certified Mortgage Advisors. Welcome to special episode 148 of the Martini Mortgage Podcast. My name is Kevin Martini, and I am a certified mortgage advisor and a member of the National Association of Certified Mortgage Advisors. I'm located in Raleigh, North Carolina. However, myself, along with a very talented crew of mortgage professionals, help families in all 100 counties in North Carolina and pretty much in every state in the U.S. too. I'm calling this episode of the Martini Mortgage Podcast, "What is the point of points?" As a primer, let me highlight that a mortgage is a financial instrument just like a stock or a bond you would have in your portfolio. Your assets have to be managed, and so do your liabilities. Yes, the asset is your home, and the liability is your mortgage. As a certified mortgage advisor, I manage the debt side of your personal balance sheet and take steps to secure the lowest cost of borrowing for you, not just at time of purchase or refinance, but through the life of the loan. It is sad that many people focus only on a perceived great rate, with no attention given to the cost of that perceived great rate. Those that focus on rate only have the wrong mortgage strategy, and the wrong mortgage strategy could cost you tens of thousands of dollars. Before I talk about the point of points, let me define what a point is. In the simplest form, a mortgage point is where a borrower pays in advance a percentage of the loan to permanently buy down the mortgage rate. Mortgage points are also referred to as discount points or as buying down the rate. Buying points make sense for some, but not all, and it never makes sense for a marketer to advertise rates with being buried in the smallest of fonts, or worse, sadly, share the presence late in the process. Surprise! Let me expand, and for illustration only, which is better? Lender A offers you a rate of 5% on a $200,000 mortgage, or Lender B offers you a rate of 4.5% on a $200,000 mortgage. Which is better? Lender A with a 5% rate, or Lender B with a 4.5% rate? At the surface, you would think since Lender B is a 0.5% better, they are a better offering. However, you cannot determine which is the best option until you consider what the costs are to secure the rate from each lender and determine the break-even point. In addition, you will even need to know how long you plan to live in the home to determine the break-even point makes sense. Lender A is at 5% with no points, where Lender B has a 3-point charge for their 4.5% rate. What does that mean? Again, a point is a percentage of the loan that a borrower pays up front to permanently buy down the mortgage rate. 3 points on a $200,000 mortgage is $6,000. Is paying $6,000 worth it? It depends. It depends on how long you'll be in the mortgage. Let me go a little bit deeper. The principal and interest on a 30-year fixed mortgage for a $200,000 mortgage at a rate of 5% is $1,074. The principal and interest payment on a 30-year fixed mortgage, $200,000 mortgage at a rate of 4.5 is $1,013. Does it make sense to pay $6,000 up front to save $61 a month? The answer depends on how long you're going to be in the mortgage. If you take the savings, divide it by the cost, you will determine the break even. In this example, if you take the cost of $6,000 and divide it by the savings of $61, you have a break even of 98.4 months, and that is over 8 years. Does waiting 8 years make sense to break even? It depends. If you indeed are going to be in the mortgage for 30 years and you have the extra $6,000 today and you believe you will never be a time that you will refinance and you know you will never move, then yes, it makes sense, because at payment 99, you will truly start to save $61 a month. Now, what if you are transferred and have to relocate and sell? What if there's a refinance opportunity or there is a need to unleash your equity and you do a cash out refi? What if you simply outgrow the home and you need to upgrade? For conversation and illustration only, let's assume one of these events occur in 4 years of you actually being in the home, and you purchase the points offered by lender B. Simply put, you paid $3,000 more than you needed to, and lender A would have been the best option. Please do not misunderstand me. There is a time for points, and there is a time not for points too. Sadly, there are some folks there that advertise home loan rates with points, and this provides the impression you are getting the lowest cost of borrowing, but you are not. Seemingly, you would think the other lender with the higher rate is worse, but again, there is no monopoly on the lowest rate. There is just savvy marketers that have their best interest top of mind, not your best interest top of mind. Yes, you're getting a lower rate, but with a premium that you may not need to pay. Relying on interest rates that are advertised is not smart, and that is why it is critical to seek out a certified mortgage advisor you can trust to review the options available to you and the best rates for your financial situation. Only a certified mortgage advisor can give you all your options in an understandable way. In closing, don't focus on the mortgage rate. Focus on the lowest cost of borrowing. My name is Kevin Martini. I'm a certified mortgage advisor, and I provide the families I serve with bankable guidance by being transparent with all the options available. During our free consultation, I can tailor a program to meet your individual needs based on your unique situation instead of focusing exclusively on rates and points. In addition, I can empower you with providing certainty. You can reach me by dialing 919-238-4934. Thank you for tuning in, and please share this episode with someone you care about. Now it's time for the disclaimer. This material has been prepared for marketing purposes only. This is not a loan commitment or guarantee of any kind. Loan approval and rates are dependent upon borrower's credit, collateral, financial history, and program availability at time of origination. Rates and terms are subject to change without Martini Mortgage Group at PCL Financial is a division of Celebrity Home Loans, NMLS 227765, with a branch address of 507 North Blunt Street, Raleigh, North Carolina 27604. You can contact me, Certified Mortgage Advisor and Producing Branch Manager Kevin Martini, NMLS 143962, by calling the branch, and that number is 919-238-4934. For a full list and more licensing, please visit www.nmlsconsumeraccess.org or by visiting martinimortgagegroup.com. Equal housing lender.